Focus on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and we have to go over this crazy trade. I'm going to talk about everything that happened today. I even have a thesis, but I made a put play today, and I made a mistake, but it was a very interesting mistake. So you see the title, $0 into 30,000. I did not do that, but this is a 2-month play, and if we do hit it on the head, we will actually walk away with 30,000. But now, something should stick out to you. How do you get a play for $0? Literally, as you see here on the transaction, I put in a limit order of 0, and I got filled at 0. The max gain on this play is $30,000, but now here's the little trick or the caveat. You can still lose money. So even though it costs me nothing to go in the trade, I mean, if it goes up 1 penny, I'm up like 100%. I don't know, am I? I don't know. But the whole idea is if it really does lead to a bigger sell-off and we are really, really wrong, the max loss is $5,000. So I want to go over this trade with you. That's how we're going to start. I want everybody to see this one because it is very interesting. And then I got the keys for you. I got the plays. There was a lot today from Monkeypox all the way down to the Fed. So we got a couple of plays out there. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/TheStackMarket. We'll see you there in the morning, and it's free. And we did this trade live free. So the first thing I got to start with, this is a butterfly trade. It is a very low probability. However, it is very, very advanced. I say this because this is how I messed up. By clicking one separate button, it turned a play with a defined risk to one with a theoretically undefined risk. So you gotta be careful, and none of this is a recommendation. But as you see here, here is the trade. I bought the 365 puts. I bought 50 in one, and then I bought 10 in another. I tried it out with 10, and I saw I got filled, and I was like, wait, let me see if I could get more. And it actually ended up working. But as far as what I did, I bought 60 of the 365 puts, and then I shorted 120 of the 360 puts to collect the premium, and then I bought the 354 puts as insurance. So the whole idea of a butterfly here is that you are pretty much saying by expiration date, if you get to that middle strike, the 360, that is where you make your max gain. So what is the risk to reward? How is this going to play out? So here's a little chart to make it simple. This is assuming I paid $60 for the play. But again, my net limit was $0. It literally cost me nothing. I just have to pay the back end. But this is where it gets interesting. Again, your max risk, 5,900. But take a look at that probability. Usually a butterfly is a 10% probability. In this case, it is a 96% probability. So I want you to see this. Yes, I grabbed puts on October on the SPY. We're going to talk about it, but I want you to understand how this play is best and worst. So here's worst case scenario. If the stock market goes to 350 tomorrow and hits the low strike fast, if it does that fast, that is where you start to lose. And you could see if that occurred, I would be down $1,300 right off the bat. Again, why is it not as bad as the 5,000? Because the other contracts will still have time and they'll still have premium. So that's the worst case scenario. But now let's kind of go to the middle case scenario, and you can see that if it goes down to 352 by the end of September, we will only be down about 300 instead of a couple thousand or even 5,000. And then now to the day right before the expiration, this one's interesting. If it goes to 350, the low point, the day before expiration, we will actually be up about 27% or $1,600. Again, we paid nothing for this. So the day before would actually be good. Pretty much if the market drops later rather than sooner, we are going to make more money on the play. And the only way you lose that 5,000 is if by expiration, it expires at 352. But if you go like 2 dots above that, you'll notice that's actually the max gain. If you end at the middle contract by by expiration, you get all $30,000. So hopefully that explains it. Hopefully you get it, but I might even want to try a couple of these. We'll see how they play out, but definitely watch out for it. And if you adjust this to your risk premium, it may be a good volatility insurance that doesn't cost much. So let's see what happens. But as far as the keys now, we really got to talk about the jobs report. That is happening tomorrow, and it will be a big deal only if it highlights the recent trend that we've been seeing. So I have a couple of charts from day to day that I want to show you, but here is the basic idea. If you do not get a negative surprise on the jobs report, I don't think it's going to have an effect. If it does show up with a big increase in unemployment and hiring is really slowed down and it matches up with some of these other trends we're seeing with the initial claims, then that will be a problem. But if it's like a little bit below or it kind of holds what it's been doing, it's going to be a non-event and everybody's just going to look towards getting ready for the next week and then CPI the week that's coming up, Wednesday, August 10th, baby. But that's the key. But now here's the charts that I'm trying to show you. Today, we had initial jobless claims and continuing jobless claims. Here's the interesting part. The initial claims came in as expected. So they came in 260,000. Nobody was expecting more or less. That was good. But the continuing claims, they came in slightly above. Now, was this enough to make the market freak out? No. The only thing people care about right now with the initial claims, and this is why now the non-farm payrolls are so important tomorrow, to see if the gap closes, and the real point is the trend. So as you see here, this is the initial jobless claims. These are people filing for unemployment benefits saying they're jobless. The first claim, the initial claim, you notice since March, it's actually been on an upward streak. This is actually one of the biggest month-over-month streaks in jobless claims going up since 2020 when we had all that fiasco. So you could see it since March, that trend has been going up. But now here's the continuing claims. This is where it gets a little crazy because it wasn't until May that you start seeing this thing go up as well too. Obviously, it's not the same way, but now factor that in. That means more and more people are filing initial claims, but if you start watching continuing claims go up, that means a lot of those people who initially filed it, they are still unemployed and not getting a job, and then little by little you start watching them compound, especially if we see job losses come in. But pretty much why tomorrow is so important now for the non-farms, we want to see if the non-farms and the payrolls data is showing what the claims data is. Otherwise, you might see that lag with unemployment and it could get a little bit sticky, or you're gonna get a lot of people talking about it. But this was the big major key. We got that data today. Now tomorrow we're gonna really see how it follows up, but definitely keep your eyes out for that in the morning. But now key number 2, I really hope you listen to me on this. Don't trust this. It's getting crazy right now. The market's being ridiculous. The amount of contradictions in Wall Street are wild. We have a crazy event with the CPI, and now economists are already pricing in a lower CPI. So now that we're coming off the peak, it might play like May and June of last year, but either way, regardless, it is going to be big. But a lot of people are talking about this latest rally. It has eased financial conditions. Nobody's listening to the Fed. Just watch out and be on the lookout coming into the CPI next week. By Monday, you may see the chorus shift and people start to talk about it. Really, it's just giving me major April vibes. If you remember, that rally was a lot quicker. We bounced up super quick. We rallied all the way back up to like 450, 460. And then little by little, you slowly started to watch it fade. Why this sticks out to me, because I remember feeling the same way. I called it out, but I was like, I'm gonna be patient with the put plays, and you'll notice it just little by little, then a big drop, and then bounce down, then a big drop, and then it just slowly got clapped. So that's what I'm keeping my eye out for. Again, it all depends on the data in the Fed, but what I'm saying is that there's just craziness everywhere right now in the market. A lot of things aren't making sense, how analysts are applying one thing to another, how the market's ignoring the Fed, then listening to the Fed, and playing this game. Again, the bonds, the dollars, and those global tensions just right now. Don't get lost in the sauce, but keep an eye out for this and maybe watch for us to play like April, maybe a little faster. We'll see what happens, but that is your second key. And finally, why my voice keep cracking, man? I don't know what's happening. Third is monkeypox. It is now a U.S. health emergency. So I'm adding this up on the list because there really wasn't too much today, but watch for the headlines because a lot of people are saying, is this going to be a lockdown, the next COVID, this, that? I don't don't think so unless it really gets a lot worse. But one thing I have noticed, the headlines are really moving the stocks. Like, you have people reacting to it, and that is causing volatility, and it's causing moves in a lot of these biotechs. But just keep your eyes out for that one. I really think it's going to be interesting to how it plays out, but it'll definitely be a catalyst in some area. So watch out for that. Those are your keys. Get ready for Friday. Get ready for the CPI next week. And let us get into the plays. So right off the bat, I got a couple of plays, and I got one that y'all are going to crucify me for. I might. It's scary. But first, let's start with the EBS. This is a monkeypox play, and why I like it, it just has a little more stability. It was listed in that Bloomberg article with the other three, like BAVA or like BVDNY or whatever. It's foreign. They're one of the best, and then they mentioned SIGA. They even mentioned the other one we got, Chimrex. But we saw EBS today off of the news, and it held up very good. The only thing I don't like about it is that the option chain is very, very weird, and it is a slow mover. So I grabbed two of the September 50 calls for $50 a pop. They went up a little crazy there, but like I said, even on the stream alert, even on stream, these days when the monkeypox headlines play, if it cools down one day, those premiums will get knocked. So just be very, very careful. But that is the first play. The second play, I finally talked about it. We already hit 500%er this week, but I like it. I finally went for the double dip on Ford. I'm also putting Starbucks on this list because I like them too, but simple. They got cheap plays. If they come back to life and have an earnings continuation, these stocks were doing good, but now these daily options are back down to the 1, 2, 3 cent level. I said, let's run it. So that's what I did. I grabbed 15 of the 4 dailies expiring tomorrow, and I went 50 cents above the contract that we got at 16. We had the 1550s, but why did I choose to go one step above? Because those 1550s, I bought them at 5 cents, sold them at 40, but they were at 10 cents when I bought this play, but this play was the cheapest. I got them at 3 cents a pop, $50 total. So if the jobs market doesn't move things tomorrow and we get some upside leading into the week, I think some of these winners might have a little bit of life. But that Ford, to go in the money, you're going to need a 4 or 5% move. So if it makes a big move and looks like it's fading early on, I just like threw up. That was weird, but I'm going to sell out of those. So we'll see what happens. But that is the second play and number 3, baby. I love you. I respect you. Don't hurt me. I'm just saying, like, yo, this is getting wild now. And this is even part of all the craziness that I'm seeing. But AMC, and I love you, apes. Like, I have it in writing. You can't say I don't love you. But I think this can turn into an interesting put play based on what they reported with this new ape coin that they're offering, or ape stock warrant. And they said it's not dilution, but it really is. And then an NFT. I just think that pretty much you are going to get diluted into weakness like they did last time. Remember, they tried to get that vote to issue more shares. And then once shareholders weren't down, I mean, I was very vocal about it. They canceled it. But if you even remember before that, though, you still had the CEO. He was dumping massive amounts of shares once the stock was already lower. And that's why I'm saying, with how things are looking coming into this, you may not feel it. This may take 6, 12, 18 months. But the point is now, with what they announced today, there is a risk that you might get dilution at a later date at a lot worse of time. So now listen, before you get mad at me, whatever, I know a lot of people got mad. It's just like, I hear a lot of people like it and I understand it. And why I say I understand this is just that I bought this stock before everybody, okay? I'm not trying to flex, not trying to be something like, but let's keep it real. I bought this stock in August 20 at $5. A lot of you got it at $2.50, and then you didn't see the meme rally start till the beginning of January 21, or even a little bit towards the end of the year in 20. But point is, man, I was in this. I went big on it. We got a decent amount, and I sold out at $38. And I hope some of you got it with me, but I've been watching this company. We've got in before the hype. We got to walk out with a killer amount of money. We got to take advantage of the covered calls. All I'm trying to say is that I see so many people on it. People are even saying they support the markets and they want to do all of this, but it's like, yo, you cannot keep supporting these half-ass attempts by the CEO to try to dilute this shit out of you, and especially when they've already been dumping and doing all of this stuff that just hasn't reflected well. So that's all I'm saying. But I'm going to be looking for a put play on this eventually, but I'm giving it an open window. One, I don't want to fight the apes, but like I'm saying, when that weakness comes in and that guy's ready to dilute, they're not going to hesitate, and I'm going to make money on it, and we'll see what happens. But those were the main plays. As far as everything else, I only made those 2 plays, the EBS and the Ford today. I did sell out half of the Lockheed Martin. Remember, we had that debit spread, went up to $1,200. It was still up around 100% today, so I sold half of them, got my $400 back, and now we have a free debit spread over the next like week or so, just in case global tensions pop off. But as far as anything else, I may want to set up with more puts tomorrow. Depends what we get, but just going to be riding the earnings continuations. Again, like Lyft killed it. Lyft, Uber, Expedia, but especially like DoorDash and Lyft. Oh man, after Uber, I think a lot of those consumer stocks may be on fire tomorrow. So we'll see what happens, but I'm probably going to go for those. And then seeing what we got. Banks looked a little shady today. Look at JP Morgan stock. That looked weird today. So I'm going to also be watching that. But other than that, going to close out the week, see where we're at, see if we can get the exposure tomorrow. Otherwise, we start setting up next week coming into the CPI. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to stop stressing about the uncertainty of the future. You may not realize it, but it's in there. It's like you really either trust the plan. Look at that. I said, that's how I'm ending it. That was on my trust God. God's plan. You see that nice? That's neat handwriting because God loves me. You see that? Wait, what? It's not, okay, anyways, but Chad, that's it. I ain't gonna go too crazy for real. That right there, even looking at that and reading it, some of these reminders, I'm telling you, it will go a long way. So I hope you're ready, Chad. I love you. Stay in the game and get ready, bro. I'm telling 2 months, two months tops. We're gonna be at the end of the year already, and things are about to enter a wild, wild end of the year. So be in the game, be smart, be wise, and always be ready to move and keep that peace. I love you. I'll see you in the morning. Goodbye. You like this, bro? Bro, I'm wearing the whole outfit today. I ain't even playing with you, bro. I got all of it, bro. You see what I'm saying? Oh, it's good. So there you go. Breathable merchandise. Again, we do it all for free, but if you would like breathable merchandise, you got a link, dog. Well, dude, my voice is on, like, not, I was about to say it's on Hunter right now, but no, it keeps cracking. I'm not on crack. But, like, dude, it's crazy, man. Okay, I love you. Goodbye.